You're watching Vermont TV.
Broadcast of travels in Europe with
4. And our final number for this Tuesday is a 2. Be sure to recheck your tickets and don't forget to join me back here tomorrow. Good night.
The Nightly Business Report on Vermont TV is funded in part by the DPM Group of Montreal, independent brokers of full financial services, dedicated to a tradition of financial security and peace of mind, and by members like you.
Philip Morris scrambles to take 8 billion possibly defective cigarettes off the market. I'm Cassie Seifert in New York.
And I'm Paul Kangas in Miami. High-tech stocks undergo some heavy profit-taking today, but the bond market continues to rally on word of weakness in consumer confidence.
Nightly Business Report is made possible by digital, doing whatever it takes to make information work for people, and not the other way around. Franklin and Templeton Worldwide formed the more than $115 billion Franklin Templeton Group, a global alliance of mutual funds and investment products distributed by investment professionals. A.G. Edwards, helping today's businesses grow with comprehensive corporate services, investment banking, and business retirement plans designed for their needs. And is produced in association with Reuters, which provides real-time market data and news coverage through a global network of journalists, photographers, and cameramen.
The bond market was back in high gear today as traders scouted out clues on the future of the economy in a report showing that consumer confidence eased in May. According to the Conference Board, Americans grew less optimistic about economic conditions than they were during April, but the current index remains stronger than it was during the first 3 months of the year. And analysts say that in general, consumer confidence, especially as it relates to jobs, remains strong.
Stocks on Wall Street opened modestly higher today in a technical rebound from Friday's 43-point tumble of the Dow Industrial Average and getting an added boost from good strength in bond prices. At 10 a.m., the Industrial Average was up almost 14 points. The Standard & Poor's 500 was up 1.5 points, while market breadth was 4-3 positive. The early rally soon fell apart when aggressive selling sent the high-tech stocks into a tailspin. During the noon hour, the industrial average followed by slumping to a 15.25-point deficit. In the afternoon, money continued to flow out of the high-tech group, but into enough blue chips to lift the Dow Jones Industrial Average to a closing gain of 9.68 points at 4378.68. So the Dow ended down about 11.5 points from its best level, but up 26.25 points from its low of the session. Trading volume today rather light, down about 10.5 million shares from Friday's slow pace. Down volume exceeded up volume by some 15 million shares. The Dow Transports gaining 6.28, and the utilities had a good day along with the bond market, up 2.63 on that average, and the closing ticked slightly bullish at plus 339. Standard & Poor's 500 down 0.07, but a 1/10-point gain of the 100. The mid-cap 400 fell 1.17, while the Commodity Research Bureau Spot Index was down 2.62. The New York Stock Exchange Composite edged up 0.29, while the value line fell 0.69, and the Wilshire 5000 down nearly 9.25 points. The drop in the Conference Board's latest survey of consumer confidence that you just heard about launched a strong rally in the bond market today as analysts concluded that a wary consumer could trigger a major economic downturn, and to preclude that possibility, the Federal Reserve's first move would be to lower interest rates. The market was also bolstered by a growing consensus that this coming Friday's May jobless report will show further signs of a slowing economy. Tax-free issues ended up a half point. Corporates rose about 3/4 point on average, and the long-term government market very strong, up 1 10/32, bringing that yield to maturity down to 6.66%, the lowest in nearly a year and 1/2. The Lehman Brothers long bond index gained 14.36, and Fed funds edged up just a bit from Friday to close at 6 1/16%. Later, I'll show you where the action was on Wall Street today. Cassie?
Philip Morris stock rebounded today, even though the company said that it'll take a charge of between $100 and $200 million to pay for its cigarette recall. Philip Morris said the holiday weekend prevented it from getting word about the recall out to all the retailers in a timely fashion. In all, 8 billion cigarettes are expected to be pulled from shelves by the end of this week.
We are continuing to instruct retailers not yet visited by our representatives to set aside and refrain from selling recalled cigarettes. For smokers looking for our products, please buy them only from retail establishments that have the posted notices that guarantee our high-quality standards.
Joining me now with more on the recall is tobacco industry analyst Roy Burry of Oppenheimer & Company. Roy, you repeated a buy rating on Philip Morris today in spite of the recall. Why is that?
Well, the recall is a one-time event. It's certainly embarrassing to the company as the world's largest and most powerful tobacco company to have this happen to it. However, it's a one-time event. Stock was down 2 points on Friday because of this, and it offered a buying opportunity today. So while we've been recommending the stock all the way along the line, we thought now was an extra special time just to pick up a couple of extra bucks. And the stock, I think, was up 1 1/2 today.
Yeah, up 1 1/8 at 71. How much higher do you see this stock going?
Oh, way into the 80s, Cassie. I mean, way into the 80s. The legal developments surrounding the tobacco industry, which periodically can act as a depressant on values, are being alleviated very, very slowly. At the same time, the fundamentals are very positive. The pricing domestically has taken a major positive turn, and the companies are just growing gangbusters outside the United States.
Now, Philip Morris said today that they'd have to take somewhere between a $100 and $200 million charge to pay for the cost of the recall. That won't significantly change your outlook on the company?
No, again, it's a one-time event, and $100 or $200 million is a very small amount of money. Philip Morris generates excess cash, every year of between $2.5 and $3 billion. So this $100 million gets paid out of petty cash.
Now, when smokers go to their local store and they ask for a pack of Marlboros and they can't buy it, does that give Philip Morris's competitors an opportunity to get in there, RJR and some of the others?
I don't think so, because the company already has retail outlets with 1/2 of the volume replenished with new products. And if there happens to be an out-of-stock condition in one of the retail outlets, the consumer, he or she, can just go across the street. So I'm sure that Marlboro and the other brands involved here are available. And cigarette consumers are extremely loyal to their brand, and as a result, I don't think you're going to get people switching back and forth for a very short time occurrence.
Okay. Thank you very much for joining us.
Okay.
Our guest, Roy Burry of Oppenheimer & Company.
President Clinton had harsh words today for the Republican rewrite of the Clean Water Act. The president said the proposed legislation would take American water quality straight down the drain, and he vowed to veto it. Mr. Clinton accused the Republican-controlled House of allowing lawyers and lobbyists to represent polluters to write a bill that provides loopholes for their industries. Republicans quickly responded to the president's charges, saying Mr. Clinton was reading off a script written by environmental extremists. The Federal Reserve Commission, or the Federal Communications Commission, I should say, is the next government agency that may be on the chopping block. Today, the Progress and Freedom Foundation unveiled a plan to eliminate the FCC and replace it with an Office of Communications Policy. Stephanie Woods has that story.
The Progress and Freedom Foundation says the FCC is too big and bureaucratic and is hurting America's ability to compete in the $3 trillion global telecommunications market. The think tank, with close ties to Speaker Newt Gingrich, says simple reliance on the market is a better approach.
The goal of this effort is simple: to provide for a modern and effective government to complement market forces to speed the development of new products and services for Americans.
The plan would cut the 2,200-employee FCC to a 250-employee Office of Communications Policy, privatize the frequency spectrum, repeal and eliminate government regulations, and ensure telephone service to the truly needy, but eliminate what they call hidden subsidies. But FCC Chairman Reed Hundt insists the government has a role to play.
I really reject the idea that there's no public interest stake in the communications revolution. The report today basically says that private industry is 100% of the story in the communications revolution, that the public has no role. I don't buy that.
Analysts say the FCC is coming under fire in part because of its close ties to the Clinton administration.
I think Speaker Gingrich on this is very shrewd and very effective. He knows that if he doesn't keep up the deregulatory drumbeat, no one will.
Most observers expect the FCC to be around for at least the next 5 years, if for nothing else than to be a referee for the new telecommunications laws making their way through Congress. But in the longer term, those laws could diminish the role of the FCC. Stephanie Woods, Nightly Business Report, Washington.
AT&T and unions representing 110,000 of its workers said some progress was made today in contract negotiations. The Communications Workers of America and the International Brotherhood of Electrical Workers are staying on the job under their present contract, which expired at midnight on Saturday. Talks today centered on health care and were heated, according to a union spokesman. Still on the table are wage issues, employment security, and pension benefits. CWA Chief Negotiator Jim Irvine said the unions would reconsider their strike option if a settlement is not reached by the end of this week. Tens of thousands of French state workers marched in protest today against the privatization plans of new President Jacques Chirac. Workers from state monopolies Électricité and Gaz de France, France Telecom, and La Poste demonstrated in Paris, demanding protection for public services. Unions fear Chirac's plan to partially privatize France Telecom will cost thousands of jobs and sound the death knell for other public services.
Still ahead on Nightly Business Report, Citicorp eliminates bank fees, but only on certain transactions.
A major change in the way investors buy and sell securities will take effect next week. It's called T+3, but some industry leaders fear it could be a big nuisance for many small investors. Suzanne Pratt reports.
Starting June 7th, millions of investors will have to step lively after buying or selling securities under a new SEC rule known as T+3, or Trade Plus 3. They will have 3 business days after a trade to pay for securities they buy or to deliver those they sell. Many in the industry say the tighter deadline, down from the current 5 days, will increase the stability of financial markets.
It's only a big problem if there is a big move in the market like there was in October of 1987, where there's a concern and a fear that if you have too long a settlement cycle, that there may be large numbers of failed transactions, which would create a problem of confidence.
But while the new rule may help keep the markets orderly, it will unsettle many investors' trading habits. Currently, many investors choose to wait until they receive confirmation of a trade before mailing in payments or stock certificates. In order to avoid late penalties or using costly overnight delivery services, many brokerages suggest investors now keep securities in street name and enough cash in a central asset account. But some industry leaders, like AG Edwards chairman Benjamin Edwards, say the new rule immobilizes investors because it forces them to keep their assets in one place. And others say it may prevent some investors from taking advantage of wild swings in the stock market.
Let's say the market goes up 400 points one day and people want to sell some stocks. If they're a cash or stock in advance customer, they're going to have that stock in the brokerage firm in advance of the brokerage firm being allowed to take the order.
Despite the criticism, many in the industry say the move is to an even shorter settlement cycle. But they say just how quickly T+1 comes about depends on the technology as well as the success of T+3. Suzanne Pratt, Nightly Business Report, New York.
Boeing's new 777 jumbo jet has won early permission from federal regulators to fly long routes across oceans. In the past, the FAA has granted similar approval for jets only after 2 years of service. The 777 is scheduled to begin commercial service next week when United Airlines flies it from London to Washington. But Paul, the FAA approval isn't expected to generate a flurry of orders for the 777 or change Boeing's employment outlook.
But the stock of Boeing today was up 1.5 to close at 58 1/8, and during the session it actually traded at its yearly high of 58 1/2. The Dow Jones Industrial Average had a rather seesaw day, up 14 early on, down 15 at noon, and then rallied to close with a gain of 9.68. Broader market higher by about a 12 to 10 ratio, 88 new highs for the year versus only 22 new lows. Topping the active list, a good representative of one of the high-tech stocks that have been so strong recently, getting its comeuppance from profit takers, Micron Technology losing 4 1/8 on 6 1/4 million shares, followed by Compaq down 2 1/4 points, Motorola fell 1 3/4, IBM dropping 2 1/2. PepsiCo bucking that trend with a 7/8 point gain. EMC Corp down 1 1/4. Carnival Cruise Line was down 3/4. Goldman Sachs brokerage removed it from its priority list and cut fiscal 95 earnings estimates from $1.65 to $1.60, and Goldman Sachs also cut 96 earnings estimates. Telmex dropped 3/16 of a point. The Bolsa index in Mexico fell 31 points today. That's a drop of 1.6%. National Semiconductor, high-tech stock, down 2 points on profit taking, but Philip Morris edged up 7/8. A number of brokerages recommended it. Air Products and Chemicals up 1 1/2 points. Prudential Securities began covering the stock today with a buy recommendation. AT&T managed to gain 3/4 to 50. Computer Associates, however, a strong high-tech stock recently, down 4 full points. TDK, Japanese company, up 2 1/8 overnight. The Nikkei index in Tokyo rose 189 points, or 1.2%. Texas Instruments down 5 1/2, and Xerox tumbling 4 points in that weak high-tech sector. Mercury Finance, one of the better percentage gainers of the day, rose 1 full point, but there was no news on the wires, and no one at the company was available to speak to us concerning that night's gain. Tidewater did well, up 1 1/8 after the Donaldson Lufkin brokerage upgraded the stock from outperform to buy. Morrison Knudsen down 1 1/4. The biggest percentage loser, traded as low as 4 3/4 during the day. Negative article in this week's Barron's Financial magazine saying that company executives will have to wrestle with their bankers in order to keep this company alive. Hudson Foods dropping 2 1/2 points, traded as low as 12 3/4. The Donaldson Lufkin brokerage downgraded it from outperform to just a market performer, and says there is some concern over falling chicken prices. Beverly Enterprises lost 1 3/4 points. The company says second quarter earnings could be hurt by up to 5 to 7 cents a share because of problems at its pharmacy unit. And Acme Cleveland, which fell last week, and the company could not explain that down move, down another 1 7/8 today. Had traded as low as 20 3/4. The company still doesn't know why the weakness is, but the stock rebounded from that low of 20 3/4 after the McDonald and Company brokerage upgraded it to an aggressive buy. NASDAQ trading a loss of 13.17. Big drop, mainly due to the weakness in the high-tech stocks, and volume picked up about 13 million shares from last Friday, 13 stocks higher for every 18 lower. Intel topped the active list, losing 5 3/8. Microsoft down 4 1/2. Applied Materials down 3 5/8. Altera dropped 6 1/4. Also hurt by news that Xilinx has filed a patent infringement suit regarding 2 products. Cisco Systems down 2 1/8. You know, just a few weeks ago when it came to high-tech stocks, the saying was every dog has its day, but right now every day has its dogs, and this is one of them. Oracle System down 1 7/8. Dell Computer losing 3 points. Novell down 1 1/2. DSC Communications fell 3. And then finally 3Com down 1 11/16. Not one gainer in the 10 NASDAQ active stocks. Sabre Software, however, a gainer up 1 1/2 on news it'll be acquired by McAfee Associates for about 1/3 of a share of McAfee stock. That's almost a $9 a share value for Sabre Software shareholders. Marsam Pharmaceuticals was up 2 1/2 points. The company says it has received several buyout offers in the $19 a share range. And Matson Technology tumbling 5 1/4 points. The company filed for a 1.1 million share common stock offering. Most of it will come from selling shareholders. The company only has 6.2 million shares outstanding, so that's a significant percentage. Over the American exchange, the market value index managed to gain 0.59, but trading volume down 1.25 million shares from Friday's pace. 232 issues closed with gains 285 lower. Topping the active list on 1.2 million shares, Columbia Laboratories, which moved up smartly last week, up another 1 1/2 after the chief operating officer today said he expects the company to be turning a profit by early next year. High Shear Technology up 2 7/8. Financial reporter Dan Dorfman quoted an analyst at DNP Capital Management who's very bullish and is looking for $25 a share within 1 year for that stock. And Hooper Holmes up 1 1/4 points. Olston will acquire this firm's home health care business in exchange for Hooper Holmes. Hooper Holmes in exchange, I should say, will get Olston's ASB Metatest unit. It's an even swap, apparently, and no earnings dilution that we could figure out. And that's our Wall Street wrap-up, Cassie.
Throughout the nation, banks are looking for ways to convince Americans that modern technology is making banking better. It is the cheapest way for the banks, as Annette Falwell reports.
Citibank to customers, use computers instead of humans. That's the message from the nation's biggest bank as it tries to entice customers to use automatic teller banking and away from using human tellers. The bank's putting money where its mouth is. After June 1st, Citibank will no longer charge customers these fees for using ATMs, for paying bills by phone and ATM, and for both personal and business computer banking. After June 1st, banking at Citibank ATMs becomes free, and so does banking by phone and computer. Citibank will still charge $1 for its customers' use of non-Citibank ATMs.
Without a doubt, it's an absolute positive because it's lowering the cost of business for banks. And at the same time, if the consumer's happy and the bank's costs are going down, everybody profits, including shareholders and customers.
But not everybody benefits. Analysts believe those human tellers who cost 4 times their electronic counterparts per transaction are likely to become an endangered species.
Employment is going down in the banking industry. I mean, it's kind of like, what's the employment in the horse and buggy whip industry today? It's not very good.
Also, as a result, about half of America's bank branches could disappear this decade.
Analysts believe many banks will follow Citibank's example. But instead of dangling the carrot of feeless electronic banking, some others are already starting to use the stick, charging for the use of human tellers. Annette Falwell, Nightly Business Report, New York.
Japanese officials said again today they want to resume talks with the United States on their car trade dispute before the G7 summit begins on June 15th. Japan's trade minister sent a letter to U.S. Trade Representative Mickey Cantor asking for a response this week to Japan's request for renewed trade talks. Japan has rejected a U.S. suggestion that the talks be held in Washington, holding out instead for them to be conducted under the auspices of the World Trade Organization in Geneva.
Coming up, Adam Smith talks about the trade war with Japan and why the U.S. government should stop playing politics.
The Supreme Court today relaxed the deadlines for employees who file lawsuits charging that they received inadequate notice of a plant closing. By unanimous vote, the justices ruled that the deadlines for filing lawsuits are the same as those provided for in the most similar state laws. Some federal appeals courts had imposed a 6-month deadline for filing the suits. The decision keeps alive lawsuits stemming from layoffs in Pennsylvania and Georgia.
The Student Loan Marketing Association said today it is suing former Chief Operating Officer Albert Lord and other dissident nominees to its board of directors for allegedly using proxies improperly. The case alleges that Lord's group solicited votes in a misleading manner before Sallie Mae's annual shareholder meeting. Last week, shareholders rebuked the company's management by electing at least 6 of the 8 board candidates who oppose removal of the company's federal charter. Sallie Mae's stock today rose a half to close at 47.
In tonight's commentary, author and public television host Adam Smith discusses the need for U.S. politicians to play fair in the trade dispute with Japan.
Does the trade war with the Japanese make any sense? It's absolutely true that some very bright bureaucrats run Japan. They stay in power no matter which political party wins the election, and their mission is to see that Japan always wins. If you show up in Japan with, say, some cosmetics and sell them to a store, the store across the street will say that your cosmetics are un-Japanese, and it will complain to the local bureaucrats who will remove your cosmetics for testing for 10 years or so. So, we have a big trade deficit with the Japanese. It's hard to sell them anything except lumber and apples, and we love their cars and television sets. And it's certainly true they don't buy our cars. Then 60% of the cars purchased in Japan are small cars that Detroit doesn't even make for Japan. I cheer the fact that we stand up to Japan, but doing it with a handful of luxury cars smells of sheer politics. Mickey Cantor probably figures if you drive a Lexus or an Infiniti, you're going to vote Republican next year anyway. Standing up to the Japanese plays well in Michigan, Ohio, and Illinois, 3 states crucial for Clinton, 3 big car states. The Japanese are not about to back down so easily. What's distressing here is that we worked very hard to get GATT through Congress. Now the World Trade Organization has succeeded GATT, and it has rules and procedures to follow for unfair trade, and we, the leaders, are not following these rules, a very bad precedent. Stand up to the Japanese, but not in this dumb political way. I'm Adam Smith.
Tomorrow on Nightly Business Report, if you like the personal touch when it comes to banking, prepare to pay for it. Diane Estabrook will report on a Chicago bank's plans to impose extra charges for the luxury of a real live teller.
That's Nightly Business Report for Tuesday, May 30th. I'm Cassie Seifert in New York. Good night, Paul.
Good night, Cassie. I'm Paul Kangas in Miami, wishing all of you the best of goodbyes.
Nightly Business Report is produced in association with Reuters, which provides real-time market data and news coverage through a global network of journalists, photographers, and cameramen. And is made possible by A.G. Edwards, helping today's businesses grow with comprehensive corporate services, investment banking, and business retirement plans designed for their needs. The Franklin Templeton Group is a global alliance of over 110 mutual funds and investment products, including tax-free income funds, domestic and international growth funds, and money market funds. Digital, doing whatever it takes to make information work for people, and not the other way around. And by the financial support of viewers like you.
Join us again tomorrow evening at 7 p.m. for the Nightly Business Report. And be sure to tune in each weekday morning at 6:45 for the Morning Business Report. Coming up later tonight at 9, Frontline explores the continuing effects of a classroom experiment conducted by an Iowa teacher on discrimination. That's tonight at 9 on Frontline. And now stay tuned to Vermont TV for this week's edition of Computer Chronicles. Next.
With more than 4,500 mutual funds available, how do you identify those that are right for you? Find out in NBR's new video, How to Invest in Mutual Funds. To order by credit card, call 1-800-535-5864.
The Nightly Business Report on Vermont TV is funded in part by the DPM Group of Montreal, independent brokers of full financial services, dedicated to a tradition of financial security and peace of mind, and by members like you.
Vermont TV is TV worth watching. Here's what's coming up tonight.